Thank you very much. And now we start our final panel for today. Let's discuss strategies for financial success in a decentralized world, and that we do with Maximilian Vergas as our host, or as your host, from Blog Stories. And Blog Stories, yeah, there you can find several times a week what moves the crypto market. Easy without hype. So, Maximilian Vergas and his experts, Feliks Eyser, Martin El-Khoury, Kerstin Eismann und Laurens Apiarius. Welcome for the final part on w3.vision on day one.
So, hello everyone. Welcome, I guess, to the final panel for today. Our topic will be how to capitalize on a decentralized future, which is basically us talking about venture capital at the intersection of Web3 investments. I have some very wonderful panelists with huge expertise sitting right next to me. So just give me the opportunity to let me introduce them to you. So my left-hand side is Ke, who is a crypto OG, investing in Bitcoin in 2011. So thanks for still taking the time to sit here and then talk with us. She's currently supporting and working with H3 Capital, which might be a fund very familiar to you. It's a huge European fund, one of the largest with over 1 billion assets under management, doing very interesting investments in Web3 space. Then there is Martin, who is in the head of the B3, the hub at Bertelsmann, which is like the internal team at the intersection of corporate VC and corporate strategy, basically responsible for all the Web3 activities for Bertelsmann, the media company. We have Feliks, serial entrepreneur, who has built some very successful startups in the Web2 landscape now, but also pivoting into crypto 5 years ago, doing investment there, and now putting all his focus onto W3 Fund, which is also one of the organizer of this very nice event. So thank you for making this possible. And then there's Laurens, who has basically pioneered institutional crypto investing, has been investing to the space for over 10 years, and now his fund, Curiosity Digital Asset Fund, is an evergreen hedge fund that is fundamentally long, so will be very interesting to discuss his opinion on the crypto ecosystem. So maybe to just get things started, prices are down, everybody's attention, everybody's mother's attention is on AI. Why do we still sit here and are bullish on crypto adoption? Maybe we can start with you, Laurens, who is with his fund taking a very contrarian view on the market. Yeah, give us your insights on why you're still convicted in crypto.
So, I mean, if you start not investing to something because prices are down, you're doing something fundamentally wrong. Because at the end of the day, what you want to do as an investor is buy low and sell high. So, and if you pair that with looking for opportunities that have a higher risk reward, you look for business models that will generate value over time. So does that mean if there's a bull run, you can just buy anything? Potentially. But the fact is, if you want to hold something, buy something, invest in something over a long period of time, there needs to be a business model that really holds true. Let's take Ethereum, for example. Today you can compare it to a growth tech stock. Like if you look at what it actually does with 30 to 70% annual increase in transactions, that sort of comes, and a 4% staking yield, that comes close to a price-earnings ratio of 25. And if you compare that to something like the Apples of this world that have a multiple of 30, 35 price earnings, you can see that there's a compressed value. So if you look at that, to answer your question, why not invest in something that's growing at such a pace, that's beaten down in price? Well, if you don't do that, you're doing something wrong. So if you apply that logic to both solutions that are already out there and those that are being innovated, early stage investments, you can find some pretty interesting stuff out there.
What about the others? Why are you still sitting here?
Yeah, I mean, maybe because I've also observed many beer markets and bull markets already. It's much easier to invest in a beer market because you don't have that volume of scams and people only looking for the next moon project, so to speak. The startup founders that I met are more mature. I can build more trust in the project they are building. And of course, from a venture capital perspective, also the valuations are more decent. And I mean, it's the greatest time for a VC to invest right now, as this brings also more let's say, more potential, more opportunity in terms of gains in the next bull market, right? Yeah.
I mean, I would say the risk-reward for investing in crypto probably has never been better than it is right now. Mm-hmm. And hopefully, it will not get any better than this in the future. I mean, we have some protocols, some projects that have kind of for quite a long time proven that there is a product market fit. They have proven that there is significant traction. They are revolutionizing the way business is done in the digital world. At the same time, those that were condemning the technology for quite a while, specifically some of the leading heads of TradFi, have now pivoted 100%, embracing the technology. So there is apparently those who kind of are listened to by some of the leading CEOs, executives, etc. They are now actually optimistic and acknowledging the fact that this technology is groundbreaking, right? And I think this is kind of setting a perfect foundation and fertile grounds for innovation to continue to flourish, and that at a point in time where, as we just claimed, the prices are quite low, and a lot of the bad projects and bad seeds have actually been already wiped out of the market. So it's much easier to kind of distinguish between noise and signal in a sense.
Feliks, what I find very interesting about the strategy that your fund is deploying is that one very prevalent point of criticism for crypto has been that it has always been around infrastructure. So we're only talking about Ethereum, Solana, other blockchain systems, and we have not reached the point where we have developed products that consumers actually use. So, but with the W3 fund, you actually dedicated a whole fund for investments into the app layer for future consumer applications. So it would be very interesting from your point of view. What do you see at this point for developments? Which use cases do you find compelling?
So I would say, if you compare Web 3 a little bit with Web 2, you saw an interesting development, right? Because in Web 2 was possible because a lot of infrastructure came into place at the same time. So for example, you had new browsers, hosting was getting much cheaper, people had mobile devices, GPS sensors, so lots of things get together to enable new business models, right? And I see it a little bit similar in Web 3, because you need the infrastructure, you need the block space, you need the wallets, you need all of that to be able to build new business models. And I think we are at the point that a lot of these things are getting cheaper and better. And this is why our thesis is that a lot of the future value creation will lie on the application layer, right? Because the infrastructure has to be used by applications, right? The applications will always have a bigger market than the infrastructure it uses. So if you build a train, you need the railway, right? But the railway industry can never get bigger than the train transportation industry. So this is why we think that the value of the next wave will come from applications. And frankly, this is also the reason why we do things like this conference, why we publish a lot about use cases, right? To educate people, to highlight use cases, to interact with brands and big companies, help them to enter Web3, to enable those use cases, to support them, because we believe that mainstream adoption will come from within Web3 and the community, but also through big brands and partnerships and initiatives from big companies going into that space. This is why we're focused on the application layer.
And maybe to make it a little bit more tangible for the audience, you've done plenty of investments already in the last couple of months. What were what was the coolest use case you've encountered?
Oh, they're all so cool. One investment, a key, and then us share is one of the newest investments. It's called Tokenized.it, and it's basically a software solution to enable startup investments on a token basis. So you can invest in a company basically with one click by sending stable coins or sending cryptocurrencies. But then again, you own part of the company. So under legal structure, under German law, you're entitled to part of the actual company beneath that, basically. So this is a real application that makes so much sense, right? Because I'm a pretty, I was before W3 fund, I was a pretty active angel investor, and I have stacks of documents from notaries, from lawyers. It's got so much money just to structure a simple investing round for a startup, right? And nobody has solved that. In Germany, you have to go to the notary, you have to have a lawyer, everything is custom made, and basically Tokenize it, standardizes that, and completely digitalizes that process based on the blockchain, which then not only makes the process cheaper, but also enables new use cases, such as using your startup equity as collateral for a loan, potentially, by building a secondary market to sell and swap the shares. So this is what we find really interesting, applications that don't only save costs, but also enable things that have not been there in the past. So that's one case we invested in.
Martin, what about the Bertelsmann perspective on the whole app layer? Because I think for you personally, infrastructure, I guess that's your entrance into the space. You've become familiar with Ethereum. Probably you bought at some point cryptocurrencies. But for a big media company such as Bertelsmann, I guess it's more about the next step, more about the transformative power of crypto applications. So what do you find interesting?
I mean, there is a reason, I would say, why we've kind of positioned this initiative at Bertelsmann Investments. I mean, it came out of Bertelsmann Investments, it is positioned at Bertelsmann Investments. It's a Bertelsmann investment initiative simply for the fact that, if you ask me, a lot of this entire space is still a venture space, right? I mean, it's not like, there are some companies obviously that are beyond that stage, and some protocols that have reached significant adoption, but everything is still quite early. This is why I find it hard to say this is exactly the case that is going to change the way, let's say, the media industry is functioning. However, if we look at what this entire infrastructure ultimately is, it's basically an entirely new layer of tokenizing and it's a fintechization of digital business models. If everything that exists in the form of data can actually develop its own intrinsic value, can be scarce, and then can kind of increase or decrease in valuation, then it also means that ultimately the same is true for content, because content also exists in the shape or form of data. And we know that, like, if you look at what content companies ultimately sell, they are not selling products, right? They are selling a sense of belonging. There's literally, maybe there's football, and then there's music, books, etc. These types of products are beyond product. They extend, like, the typical consumption. There is significant identification, and I think leveraging that, using this technology by introducing this notion of value, making people, or opening these types of asset classes, which, by the way, are very attractive as investments. This is why content companies buy content catalogs, because they have significant APY. Opening a share of that up to the audience to invest in that as a company, getting liquidity from selling these types of shares and still participating, then also using the same type of asset to enhance customer engagement, have platformless communities which don't depend on platforms like Reddit or YouTube or Facebook or whatever, but have actually this direct interaction. I think this is something that is, and it's a paradigm shift. And this is where I think, without knowing exactly what the game-breaking or game-changing business model is going to be, I think one of them definitely is going to be in that realm. And this is what we are emphasizing and looking into.
What do you think about what the others said? Because obviously there's this paradigm or this thought of the FET protocol thesis that like at the end, all the value will accrue to more the infrastructure stack. And on the other hand, there's the app thesis, what Feliks was telling us.
I'm going to try and answer it in a way that is raising some thoughts in everyone's mind, which is a bit of a pink elephant that's already in the room. You mentioned it in your intro, it's AI, large language models. Most people are saying, yeah, blockchain's out, AI is a new thing. However, if you dig deeper, what do large language models do? They consume data, and they analyze it, and they create an output. There's a French saying, shit in, shit out. So the better data you can put in, the better the output will be. So why am I saying this? I'm saying this, the fact that people are negating crypto because of AI is just the wrong way around, because AI has emerged to be the most frequent application that smart contracts have seen so far. So the amount of transactions that large language models are producing is fantastic, and it's just getting started. Everyone knows NVIDIA, graphic chips, yeah, that's needed for AI. But no one's thinking about the push cards, the rails to get the gold out of the mines. And that's where we think AI is a critical thing that's relevant, and it's by far the biggest consumer group out there. If you think about 8 billion people doing one transaction a day, boring. If you think about 3 large language models doing thousands, millions of transactions per day, this is where it gets interesting. And the real question now is, how do you position yourself for a use case called AI with respect to crypto that may be more relevant than funky monkey pictures that we've seen last year or the last 2 years? So this is how we think about it, and where I think, at the end of the day, it depends on transactions being generated, because that's what's driving value over the long run. So when we think about the consumer, it is masses of transactions, because we focus on also the application layer, but more from a infrastructure point of view. What push cards are needed to actually use the applications that are already there or will be built?
Maybe to jump in on that, I think also from a media perspective, media company perspective, what we're always forgetting is that there is some substantial risk to generative AI, specifically in the content industry, and we are yet to find an IP enforcement layer for all the things that are going on. And I mean, I'm not particularly saying that there's so many overlaps between these two technologies. There are some, but incrementally they are two different paradigm shifts. But this kind of data infrastructure that is now being created can actually solve a lot of problem when it comes to enforcing IP, when it comes to hedging against fake news, when it comes to hedging against artificially created content that is not actually to be kind of referred to you as a person, but it is because every conversation just looks like it looks and sounds like it sounds. If you have provenance, however, to every conversation, every type of content out there, then you can actually distinguish between fake and real. And I think this is, I can imagine that the blockchain is actually a very important hedge against that.
And adding to that, if there's a Chinese huge company in the next hall that's created a Chinese version of ChatGPT, and if you ask it where COVID came from, you'll get a very exciting answer, the same as whether socialism has upsides or downsides. So again, to that point, whether it's fake news or objective news is something that in the long run needs to be sorted, and that's where regulators will embrace you with open arms if you have something to support that.
And one aspect I think about is also different AIs talking to each other and different large language models cooperating, right? Because we haven't seen much of that. Most of the models are very generalist. We use one of the models and we get the answer or the content. But in the future, I guess, we'll have different chains of AIs talking to each other, and then payments are going to be an issue, right? One model wants to pay the other for some sort of microservice, and this is where crypto would come pretty handy, right? I see a future where a lot of the requests to those models could be triggered by smart contracts, actually. So this could be an interesting intersection.
If you go and ask ChatGPT what currency, last point. If you ask ChatGPT what currency it would use on a preferred basis, including existing currencies, commodities, crypto, the answer is Ethereum.
Really?
Yeah. Super interesting.
Yeah, I mean, they're not able to go to the bank and open a personal account so currently. So it's a quite natural fit for them to intersect with each other. Maybe just to continue on this discussion, because obviously it's quite interesting to discuss AI and crypto, coming to another category, which is called decentralized physical infrastructure networks. You've done a very interesting investment into Impossible Cloud, which is like a decentralized network for cloud services. Would be very interesting to have your thoughts, because you also did other investments in this category. What you think about this trend?
Yeah, we observe also that this decentralized cloud infrastructure, or the saying that we need to have more decentralized compute resources to build trusted applications. And what was important maybe 4 or 5 years ago for the first step now is going to be also relevant for enterprise customers. So what Impossible Cloud is doing, they provide big companies access to resources or cloud computing resources. They aggregate resources, and then you, as a large enterprise company, you can also decide to use these resources. But I also wanted to add some thinking to the AI topic, because it's, sorry to say that, Max, but it's so super interesting, as I can see how the space is converging, that AI on blockchain, I think it's a perfect match, or it's the beginning of an autonomous economy. So, for example, quite recently we invested in a project called Autonomous, and they provide autonomous AI services that do execute tasks on behalf of DAOs or dApps. For example, salary distributions or treasury management, rebalancing. They do all these nitty-gritty activities, but as an AI. And then what I found super interesting and wonderful, that each transaction then is executed and signed on a blockchain. So this is the, I would say, the native organism for an AI to do everything what an AI can do, or what the AI will execute will be signed by a private key, and the transaction then will also stored on a blockchain. Yeah.
Very interesting. Any other remark on the whole crypto AI debate?
How many hours do we have?
We could continue like forever, right? No, but maybe to shift the conversation more towards the question of what is actually different from investing into a decentralized future versus investing into a centralized future. I know that, Lorenz, you are only doing token investments. You're not too bullish on like traditional equity investment into startups. Can you walk us through your thesis on why you prefer your token investments?
Well, there's two aspects. One is the infrastructure layer that simply only works if it's token-based. That's the one part. If you migrate towards applications, whether it's a DeFi application or anything else, if there's a business model and that's generating revenue, I want to invest in it. But if I invest in it, I don't want to have a shiny utility token that gives me a right to vote. That's not all. I also want to participate in the revenues. I mean, the comparison between NASDAQ profitability per employee and Uniswap profitability per employee is a staggering comparison. So what are we looking for? We're looking for the next level of what a company looks like, a truly global company, which is a DAO. So it's a token-based economy that has certain characteristics, which means me, as a 1% token holder, as an example, I get 1% minus a protocol fee in terms of revenue attribution. So effectively, we look for ownership. And this is, to me, where everything could be headed. Not every company should be tokenized, but those automated business models where it makes sense to have that kind of aspect is what I find fascinating. This is one part. The other part is, as an investor, I'm mitigating my risk by doing that, because the fact that most of those applications only work if the token's tradable can be a good thing, because there's speculation on it, but there's also volatility. However, if me as an investor, I've lost conviction in the project, I can get rid of it rather than hoping for someone to buy it off or just write it off. So there's two components. One is the more important one, which is this a business model that makes sense in terms of a token economy, and how can I capture that value, which I do by buying cheap, selling high? On the other side, how do I mitigate risk in my portfolio by means of taking profits or getting rid of a position, if I can?
But the others are still doing basically like you're putting the emphasis on the equity investment side, right?
No. For us, we don't put the emphasis on anything. We let the founders decide, right, and go with them. And for us, the way I view it is just a technicality, if it's a token or if it's equity in the company, as long as the value really accrues also in the token, and it's not just some voting mechanism. So that's a prerequisite. And then I would say a lot of projects only work with a token, but a lot of other projects, for them it could be harmful in the early stage to have that token because it implies so many things, right? You have to think about tokenomics, security, maybe tax implications, all of that, and maybe you're not so sure on how to design that. So this is, interestingly enough, why we see a lot of the founders we invest in choose to go the equity first, token second path. And I think in a lot of instances that makes sense.
So you have this change in investment structures. You have the token now, and you can think about investing into tokens. But you have also other challenges and differences when it comes to traditional startups and Web3 crypto startups. So from your point of view, with your experience, also from HV Capital and their experience in investing into the Web2 space, what other differences do you see when you compare business models, but also especially teams building in the crypto space?
Yeah. So what I can observe that, for example, the community or community building aspect, it's much more important for Web3 company in contrast to Web2, as your community, whether it's on Telegram, Twitter, Discord, basically is your customer base or the people that engage with you directly. They give you feedback. They also have a saying in if the token will explode or not. So, so when I take a look at a crypto startup, so maybe I'm too harsh on that, but one of the first things I'm doing, I check their Twitter account. And then I also need to understand if they have backers. So you need some people who are willing to support you, to speak about you. And Twitter is, from what I see, the first medium or the first channel that someone is aware of a new trend, of a new project, of a new standard. So community building is super, super important. One other topic which I can already, we have a crypto portfolio of roughly 10, 11 companies as of now at HV. And they start to have the technical question on which blockchain to use for the mint of the token. Will it be on Polygon, or Polkadot, Ethereum? And then it's again the question, for example, the Ethereum community or the EVM community is the largest community as of now. So go where the clients are, go where the customers are, and from what I've seen as today or in this year in particular, there's a strong tendency towards EVM blockchain. And these are discussions that we don't have with Web2 companies at all. So which autobahn, which street, which infrastructure to use to build your application.
And is this whole community debate a result of the space being very early, very immature, with quite few people interacting with these products, or will it also scale with crypto and it will continue to be important? What do you think about this? Martin, you were shaking your head, so.
Yeah, now I was nodding. I think, so what is the value proposition if we go back to the fundamentals behind a token investment? What is the difference between, let's say, a DAO and a corporate structure? The valuation of a corporate structure depends on the employees. They are and on the customers, of course, but the input of labor force, skills comes from employees, right? But this is a limited amount of people who can engage. When you tokenize something, you make it accessible, and you have incentive mechanisms so that every smart person globally can participate, can add value to the ecosystem, scale the ecosystem, and then make money at the same time. I think this is fundamentally different from equity. As an employer, you're not a shareholder, so likely you will do what you're paid for, right? But when you are a shareholder, then the growth of the company, your growth, your input extends beyond the growth of the corporate entity that you're working for. And I think this is a fundamental difference. Now, bringing in the community aspect, this is why I believe the community aspect will still in a couple of years be centered to this whole ecosystem. What you're doing when you're participating in a project like this, you're joining this community. You're buying a token. You're having a tangible buy-in that makes you a part of that. This changes the incentive, and this incentivizes you to do whatever you can in order to help this ecosystem grow. The same is true for NFT projects that are being launched. This is, if you ask me, why are many of the, let's say, non-Web3 NFT projects where we are using something existing and then applying an NFT, why is it not working? Because life in this community is not revolving around the token. You just have a token. But if life revolves around the token and your input is actually increasing or making the cake bigger, then this will, there's things that are possible that were not even imaginable before in terms of a growth and value accrual. And this is why I believe community will always be relevant in this space. It's like Marc Andreessen said, no matter how many smart people you have in your country, there's always many more smart people outside of your country. And this is, for me, the biggest value proposition in tokenizing these types of ecosystems.
But maybe to be the devil's advocate, you could also make the case that it's very dangerous from a retail investment perspective to allow everybody to invest at a very, very early stage, even before product market fit, into every protocol or every DAO. So how do you think about also with regard to the regulatory discussions that are going on about whether to allow retail to invest very early versus only like limited to sophisticated investors? Maybe Logan.
If I may, I mean, you've basically answered the question yourself.
Yeah.
The question is, how is it going to be handled? That is typically being handled by regulators. So what's happening at the moment to make that case, to support that? If you look at the US, there's the Digital Assets Market Structure Bill in the House at the moment, and hopefully it'll get passed because it very clearly, very illustratively shows at what stage can what kind of investor invest, and at what stage is it okay to be a free-floating token. So that is, in a nutshell, investor protection that works for stocks, has worked for stocks, but it has not yet been applied to tokens. Something similar is what we've seen in Europe with the MiCA directive, but in a smaller variant. But to be honest, I do think the US is more relevant when it comes to setting standards for that. So that's something I would look out for to see what guidance the SEC or the US will give towards that. And anything else will result in what we see today. There's an equity company that will at some point issue token when it's sufficiently decentralized, and not until then. And they are still only allowed to sell to professional investors. So nothing really has changed. The ultimate goal of that is to get rid of all the scams that sell directly to retail.
Yeah. But I mean, if you look at venture capital in private markets historically, right, this is a very prohibitive space. Normal retail investors cannot enter the space. They have to wait until the company goes public after 10 years, maybe, and then they can buy some shares, right? But all the value created before that goes to founders, insiders, and venture capitalists. And even venture capitalists, we were a fund ourselves, right, and we're raising money. But normal people cannot invest into the fund because there's a very high minimum ticket. In Germany, at least, in other jurisdictions, it's very similar, right? So it's very prohibitive to do that. On the other side of the spectrum, you have crypto projects where anyone can say anything and then raise money from retail people and then mislead them somehow. So that's also not the solution, right? So I think it should be somewhere in the middle, not to have to wait for 10 years, but also have some basic retail investor protection to avoid the scams.
Yeah. Maybe to conclude this conversation, because the music is getting louder, everybody's getting ready to party. What is your outlook? Like, what are the trends, developments, things happening in the space that you're most excited about, that you're currently like keeping a close eye on? Maybe just go like this.
So this idea of having a fully autonomous or automated financial system is something I am observing since I joined the Bitcoin space a few years ago. So I see more and more pieces coming together that at some point in the future, and we also see that traditional financial institutions are entering the space because they have understood that this new protocol helps to gain have efficiency gains for remittances or T-bills or any kind of digital assets. So, and the more transactions we can do on-chain, the more we will see a future having a fully automated financial system, which at the on-hand side also gives access to a target group that has not yet has access to banking, so this democratic aspect. So this is something I find interesting, and I also invest in those companies.
I would say the same. And I would say it's the translation of what is happening in the financial industry to all the other industries that are kind of plugging into this infrastructure layer. Because there was a lot of experimentation going on. I think some cases were very interesting and very successful. Others obviously maybe didn't get it right. I hope that with TradFi kind of big time entering the space, that there will be kind of new incentives also for larger entities, larger players to kind of translate the insights that they see from the financial industry for their digital business models. And I'm very excited to see what is coming out of that.
I'm also looking closely at tokenization of real-world assets. And I think this current market environment is good for that because traditional finance institutions need to save money, right? Because it's very costly to do emissions in a traditional way, and it's cheaper to do it on a chain. So I think this is going to be an interesting development, and I'm looking forward for anything in that space. This is why we invested into Tokenize. This is why we invested into CashLink. This is even why we invested in a company called Phantom, where you can invest in athletes, right? So those are, for me, alternative investments, right? You would suddenly are a shareholder in a tennis player, for example. So completely new kind of business model enabled by the blockchain. So those are the things that I'm excited about. I'm really looking forward to the new Apple device in the next 12 months and see what that brings. Spatial computing, a new generation of apps on a completely new device. I think it's still way too expensive for mainstream adoption, but still a good step in that direction. So it would be super interesting to see what gaming applications come out of that one. Right. Those are my two areas. What about you?
I think all of us have mentioned enough reasons why we are all convicted of this space and obviously biased. So what else I would add that's different is, or additionally to that is monetary policy. Because as long as monetary policy is still on a tightening slope, no markets can be created that support early stage risk topics. So that's something you asked what I'm looking out for. This is something I'm looking out for because that would potentially end this supposedly boring time. As an investor, it's the best time to be alive. But from a market's point of view, boring time, 50% up, 50% down. This sideways movement is just boring, but it's a good time to invest, I think. And monetary policy could be one of the enablers to change that into a direction that we would all certainly appreciate.
So we're waiting for Mr. Powell to flood the gates again and bring in the liquidity.
With all that comes with it.
Great. That was very insightful. Thank you so much for sharing your opinions. And yeah, we're looking forward to the boom boom music activities now.
Thank you.
Thank you.
Music is starting, and please join us at the bar at MetaBrew, our friends, the NFT brewery. So we have the free beer. People are probably lining up for that.
Nice.
So thank you for coming, also from my side. And thank you, Max, for hosting the panel.
You're very welcome.
So it is.